Good evening, everyone. So today our training will be based on essential charts knowledge. I will be treating margin today. So I've already informed us yesterday that our training today will be based on margin. So if you are talking about margin, margin is give you the ability to enter trade larger than your account's balance. In Forex markets, you must understand what margin is all about. So many traders don't understand what margin is all about, and that is the reason they are losing a lot of money every time. So if you want to become a profitable trader, you must understand what margin is all about, margin trading. So margin trading gives you the ability to enter, to trade, and to trade a larger amount. So let's assume you have $1,000. You have $1,000 in your balance. You credit your account with $1,000, and you want to trade an account that is much more higher than 1,000 USD. So margin will give you the ability to trade larger amounts in the markets. So if you're talking about margin, for instance, let me show you my whiteboard so you can understand what I'm talking about. So I believe you can see my whiteboard. So you have 1,000 US dollar. You credit your accounts with 1,000 US dollar. And you want to trade this 100,000. Margin will give you the ability to trade 100,000 accounts with just 1,000 US dollar in your balance. When you credit your accounts with just 1,000 US dollar, you will be able to trade an account and move a market worth of 100,000 US dollar. So let me explain now. We have margin requirements. So we have margin requirements, and this margin requirement is based on the currency you want to trade. Like for instance, we have Euro USD. For Euro USD,
we make a worker promise, light in the darkness. My God.
So for Euro USD, you have a margin with just 2%. So we have Euro AUD with just a margin of 3%. We also have USD APY with just a margin of 4%. And we also have GBP USD with just a margin of 5%. So this actually have a way they calculate this. So now, if you want to create, if you want to trade Euro USD, for instance, now you only have to have just 2%. Although this depends on the broker you are using. I hope you understand what broker is all about. So you only have to, you just only have 2% out of the capital of the market you want to trade. For Euro AUD, you just only require to have just 3% out of it. Like for instance, now for you, from my example now, I say you just need 1,000 to trade 100,000 account. This is just 1% out of this. This is just 1% out of this. If you are trading Euro USD, you only need to have just 2,000 US dollar. Just 2,000 US dollar to trade 100,000 accounts. It just requires to have just 2% of the capital of the overall capital you want to trade. For Euro AUD, just 3%, USD JPY just 4%, and GBP USD, you only need to have just 5%. This is margin requirements, but that is not where we are going to. So I just want you to understand what this is all about. So what we'll be treating today is margin, trading a market that is bigger than your account balance. Let me show you and share you my MT4. So this is my MT4. We have what you know, we have balance here. My balance here is 95,177.89. This is my balance. So balance is the amount of money you have in your account. Now, when I open a trade, I open a new trade. Let me just open a new trade now. This is a new trade. It's not going to affect my balance. Can you see? It's not going to affect my balance. It's not going to affect my balance. If I credit my account with 1,000 USD, it will appear here that I have 1,000 USD as my balance. I hope you understand what balance is. So if you are talking about let's go to unrealized profit or loss. So this is the unrealized. When I close this trade now, this is the unrealized profit or loss. Currently, the account is minus, which is my account is at minus 5.32 floating loss. When I now close, this doesn't mean I've started losing money. When I now close this market, this particular trade now, then minus 11 will not be deducted from my balance. So if the account is on profits, the profit will be added to my balance, and if the account is on lose, the lose will be added to my balance. But when the market is still open, nothing is going to happen to the balance because it's not closed yet. And when it is closed, that is when it is now a realized profit or loss. But currently now, it is unrealized profit or loss. So I hope you understand that as well. So we've understand what margin is, what balance is. Let's look at margin here. This is another margin here. This margin is also called used margin. So let me close this trade. Let me close this trade. Can you see we don't have any margin yet because no trade is opened. We don't have any open trade. But immediately I have an open trade, I will have used margin. I will have a margin here. Then what is the meaning of this margin? Margin is the amount that is being kept aside when a new position is open. Like when a new trade is open like this, the amount that's being kept aside for me, the amount that's being kept aside, that is what we know as margin when a new position is open. When a new position is open like this, but this depends on the broker you are using, the kind of broker you are using to trade. Okay, let me explain this in the whiteboard so we can understand it better. I hope you are all seeing my whiteboard.
Yes, sir.
Let me close this. So we have what we know as leverage in trading. Leverage. So we have 1 to 5 leverage. We have 1 to 10 leverage. We have 1 to 100 leverage. We also have 200 leverage. We also have 1:500. We also have 1:1000 leverage, and so on. So it's still the same thing. If you say 1 ratio, some broker will put it this way, like 5 ratio. Let's assume I want to use 1:500. You can actually come across it this way. So people will write it in this form. So it's still the same thing. It's still the same thing. This is leverage. So if you are talking about margin, the amount that will be kept aside for you when a new position is opened, although we have a way to calculate this, the base currency divided by account currency times 1,000 units of mini lots, then times your lot size divided by the broker leverage. It will give you the actual margin, the actual amount the broker is going to keep aside for you when you are trading. So this leverage now, okay, let's assume I'm using 1:500 leverage. 1:500 leverage. So let's calculate this. Let's calculate this together. So let me show you my MT4. So let's assume I'm using Euro USD. We are using Euro USD to take our trade. And currently, I want to go for long. I want to go for buy. So currently, I have market is at 1.10558. So I said you want to calculate our margin to know the actual amount a broker is going to keep for you, to keep aside for you when you open a new position. So if you want to calculate this, you take your base currency. What is our base currency? We are using Euro USD. So our base currency is Euro. So, and I've taken down the number, and the number is 1.10558. When your base currency and account currency is the same, we are going to take it as 1. Like we are using Euro USD now. We are using Euro USD. So this is the base currency. Euro is the base currency, while USD is the account currency. So let's assume we want to trade on USD JPY. So since our base currency is still the same thing as our account currency, so we are going to take this as 1, which means our base currency is 1 and our account currency is also 1 because we are trading on USD accounts. So when you are setting up your you want to create account, a forex account with any of the broker, they will ask you which of the account currency will you like to trade on. Then we choose USD. That is our account currency. So when you choose Euro as your account currency, so Euro will be your account currency. So now we say our base currency divided by we say our base currency will be divided by our account currency. And what is our account currency when we are using Euro USD? Then it is 1. Then we have to multiply it. Then we multiply it by 1,000 units, mini lot. mini size. So then we multiply it as well with, let's assume we want to use one lot size, then divided by the leverage, and we want to use 1:500 our leverage. So divided by 500. So if we calculate this, let me calculate this. If you can actually calculate this 1.10558 divided by 1 times 100,000 units times 1, so divided by 500. So this gives us 221,116. So let's go to our, this is the answer I just got. 1.116. So let's go back to our MT4. So let me take this trade. It's already in one lot size. Let me take this. We made mistake in our calculation. So the base currency divided by the account currency times 100,000 units times lot size. You are using one lot size. Oh, this is what happens when I'm setting up this particular account. I know the leverage I use is 1:100. So I just realized that now. It's 1:100, not 1:500. So that is where the mistake comes in. So let me recalculate it. Point 0.558. These are base currency divided by our account currency, which is 1. Then multiply by 100,000. Then multiply by lot size, which is 1. Then divided by 100. So let me quickly calculate it. It's 10558 divided by 1 times 100,000 units multiplied by 1. So the answer I got here is 1105.
0.58.
105.58. So let me go back to my MT4 and take this trade. So it's in Euro USD, and we have our one lot size here. I want to go for buy. So we got 110. We got 1105. You know, this is changing. This particular value is changing. So the difference will just be a little difference. That's a minor difference.
Okay.
So this is the amount. In this particular account now, they are going to help me to keep aside $1,106. They are going to help me to keep this particular amount. So this is what margin is all about. The broker will help you to keep a particular amount of money So in case you have a negative floating loss, because some people will just jump to market and they start trading without even considering margin, and before they know it, the account will be wiped, and it will force the broker to close the accounts to stop them out, or to help to receive a margin call from the broker. So, but if you have a good account management, it will be difficult for you to receive a margin call, or your trade should stop you out just like that. So I hope you understand what this, we can call it margin, we can also call it used margin. So let's go back to equity. So this is equity. There's how to calculate equity. So equity is the balance, your balance minus open trade. Your balance minus open trade will give you the value that will be in your equity. So these are our balance. We have $95,183. So minus our open trade. Currently, our open trade is at minus 28. So if you minus this amount from your balance, which will give you your equity, to give you the amount that will be on your equity. So equity is the real-time calculation of profit or loss, either profit or loss. So when the account is in profit, it change. You can see it start changing in this equity. And when your account is on loss as well, they will be deducting it from your equity. Nothing will happen to the balance until this trade is closed before it now affects, it will affect your balance. But when the trade is not closed yet, it is not going to affect this balance. So that is what equity is all about. So if you calculate your equity, it is balance minus open trade, your open trade. So we have what we know here as free margin as well. So as I explained earlier, margin is the amount that's been kept aside for you when a new position is open. But you're talking about free margin. So free margin is that amount to open a new trade. I say free margin is the amount that is available to open a new trade. So if I want to open a new trade now, I only have $94,033.47. That is the free margin I have to open a new position. So if I decide to keep on opening a new position and I exhaust this free margin, they won't allow me to open any position anymore. So I will not be able to open any position. So you can say free margin is the amount available to open a new position, or the amount that existing position can move against you before you receive a margin call or a stop out. So we have open trade already. We have like this one now. We have minus $40. This is our open trade. We have minus $40. So when I start having a floating loss, then I have a floating loss worth of 94,000. Automatically, the system will stop me out automatically. So as I'm having a negative here, my account is on loss here, it still affects my free margin. It will affect my free margin. If I have positive, my free margin will increase. If my account is on negative, my free margin will also decrease. So free margin is the amount you have available to open a new position. So I can open as many possible positions. So let me increase my lot size here. I want to open a trade where I will exhaust my free margin, so you can see. Let me use 5 lot size. So as you can see here, I only have 85,000 free margin left. So let me still open more position. Yes. So with this lot size I'm using, so I only have 29,403 free margin. So I can still decrease the amount of lot size I'm using. So let me reduce it to 10. I will be allowed to open a new position. So I have exhausted this as well. Can you see? So my free margin decrease. My free margin will start decreasing. So when I can still close it as well. So when I close it, they will now return this amount of money, this free margin. They will now start returning it back to what? They will now start returning it back to my free margin. If I am closing a position, the amount they will return it back to my free margin. So I have 30,000 free margin left. So if I close more position, I will have more free margin left. But if I exhaust the free margin, I won't be able to open any new position. To tell me I don't have enough margin left to open any new position. So that is what free margin is all about. So it is the amount available to open a new position, or when you already have a open position, the amount available for a position to go against you to receive a margin call or a stop out. So another thing here we are going to look into the margin level. So margin level is calculated based on percentage. Calculated based on percentage. So it's the percentage value based on the amount of equity versus used value. So versus used value. So we have two types of margin level. We have higher margin level. We also have higher margin. Let me move this person. So we'll be looking at margin level. So margin level, to calculate margin level. So margin level is the equity divided by the used margin multiplied by 100%. So equity, your equity, this equity divided by the used margin, this particular margin here, equity divided by used margin multiplied by 100% will give you the amount of margin level you are going to have. So each broker sets a different margin level limit. Each broker will set a different margin level limit. So let me show you my whiteboard to explain this better. So I have this now. I have, like, let me say, I have 150 here. Here I have 100%. Here I have, let me say, 50%. Here I have 0%. So this will be based on percentage. So to receive a stop out or a call, a margin call, we determine how much is your margin level. So, but most of the broker, they set their margin level at, if your account is under 100% margin, you will receive a margin call. So now your account have start decreasing to 150, nothing will happen. But immediately your account reach 100% margin, you will receive a notification from your broker that your account is what? Your account is at risk. That your account is at risk. So, but when you keep on trading, when you keep on having that floating loss and your account decrease to 50%, then the system or the broker might automatically close the trade by themselves. They can be closing the trade one after the other. So let me go back to the MT4. Let me go back to MT4. So this is it. This is my margin level. Currently I have 8,612 margin level. When this decrease, when I start having too much of floating loss here, I have too much of floating loss here, it will affect my margin level. And when it affects my margin level, I can have a margin call from my broker that my account is at risk. And before I know it, I did not close the trade. Then before I know it, then they can automatically stop me out and stop and close all my trade. So you have to understand the what margin level is, the margin, free margin, margin itself, equity and balance. Hello, are we still on the call? Hope you can hear me.
Yes, sir.
Okay. If you have any questions along with my explanation, you can just notify me so I can be able to come back again and explain myself. So let me recap all what I've explained so far. So balance.
Hello, sir.
Okay.
Okay. Hello, sir.
Yeah, I'm with you.
Although I kind of joined kind of late, sir. So I'm having a hard time catching up with what the margin, percent, call, and other things that you just explained, sir.
Yeah, I will do a recap now. So explain what to re-explain what I've explained so far. So this is balance. This is my account balance. When I credit my account with 1,000 USD, it's going to appear here. If it is 100,000 USD, it is going to appear here under account balance. Immediately I open a trade. I have an open trade. When I close this trade now, this is the account. Accounts, equity, and free margin, they are all going to be the same. But immediately I have open trade. Then I start having a margin. Now, what is margin? Margin is that amount of money that is being kept aside for you when a new position is open. Now, let's assume I'm using a higher leverage. You have to understand leverage as well. I'm using a higher leverage. Now, the more leverage you are using, the high risk you are taking on your accounts. Like, okay, let me show you whiteboard. Let me show you my whiteboard to explain. To explain leverage. So this is how leverage works. You can have one ratio 100. Like this particular account I'm using now, the leverage is 1:100. The leverage is 1:100. So which means if I have 1,000 USD on my account, so they should only keep like 100,000 like this $100 aside. When you are trading on, okay, there is a way to calculate this margin. There's a way to calculate this, our margin, our leverage. Yes, leverage. The higher your leverage, the higher the risk you are taking on your accounts. So someone that is using 1:500 is taking more risk than someone that is using 1:100 as their leverage. Before someone that is taking 1:500, before you can receive a margin call, your accounts will be at the rate of maybe $200. But someone that is using 1:100, your accounts will be safe. Before you receive a margin call, it will be what? Maybe your accounts will be really safe. Like you can even receive a margin call when you have you can't receive a margin call when you are using 1:100 because your account will be safe. It will be really safe. So there is a way to calculate this leverage, the leverage you are trading on. There's a way to calculate it. A moment, please. Yeah, the point here is that there is a formula to calculate it, to calculate our leverage, but I will get that later. But the point is that the lower your leverage, the better. The lower your leverage, the better. Like some broker will give you chance to trade on 1,000, 1:1,000, 1:1,000 account. This is a bad leverage. It's not a good leverage at all, because before you know it, before you receive a margin call, a stop out, your accounts must have been in a dangerous level at that moment. So when you are using a 1:100, so your accounts will be really safe. So what I'm explaining under margin is that the amount that's being kept aside for you when a new position is open, and we've calculated it. Now, for example, on this my particular account, I'm using an 100K account, and when a new position is open, they will keep just $1,100 and something for me. Like this particular margin now, $1,163 is being kept aside for me. So maybe now all this 94,910 is in floating loss. So for me to have chance to open a new trade, a new position, so the system will I will receive a margin call, or the system will automatically close me out of the trade. I hope I'm not making this complex. This margin of 18 is just what you have to take your time to understand the concept, how it works. But don't focus much on the calculation. Just focus much on how it's being used in the market system. How it's being used. You have to just understand the concept of margin. So when you want to register with any broker, you can just chat that broker up. What is your margin level? So the broker will be able to explain, okay, this is what we charge for our margin level. So just know that margin is the amount that's being kept aside for you when a new position is open. And our free margin is the amount that is available to open a new position. Amount that is available to open a new position. And we've tried it. When your free margin is being exhausted, you will not be allowed to open any position anymore. And our margin level So it's calculated based on percentage. Is the value based on the amount of equity versus margin. So to calculate our margin level, we say it is equity divided by the used margin multiplied by 100%. So when our account is less than 100%, most of the brokers, they set it at the rate of 100%. Then when our account is less than this 100%, then we will receive a margin call. A broker will call you or give you a text message to notify you that your account is in danger. That is what the margin level is all about. So to explain further, what is the stop out level? So stop out level is the level that your account will automatically close you. You'll be closed out from the market automatically. If I want to, like this trade now, this particular trade, so I can close it manually. I can open a trade manually. I can open a trade manually and I can close it manually. But when you reach a stop out level, the system will automatically close you out. The system will automatically close you out. When you don't have enough margin level, the system will close you out. So this is how it is. I've already drawn it on our whiteboard. So this is how it is. So when you receive a margin call from this 100%, when your account is less than 100, you receive a margin call here, and you did not close the floating loss, and your account keep on coming down, decreasing, and your margin level reach 50%. The system might close you out. Depends on the broker. Some broker might actually set their own to 20%. 20%. Some broker will set it at the rate of 50%. But irrespective of the broker you are using, when you receive a margin call and you still continue having a floating loss, a loss on your account, then the system don't have any choice than to close you down until you add some fund in your account balance. Maybe when you now credit from fund, you lose some fund on your account, then you can now have the ability to trade. So that is what stop out is all about. You understand the margin call and the stop out level. The system will automatically close you out. So the system can close you out one after the other, or they close you out at a time. So I don't know if they have explained what spread is all about for us. So let me go back to my MT4. So in further explanation, what spread is all about. Spread is the difference between bid, which is the sell price, and the ask, which is the buy price of a currency pair. Some broker actually, okay, let me open a trade to show you. When I open a new position now, this is we have what we call swap. We have what we call swap. This is profit. Let me take it from here. This is profits. So currently I have minus 3.17 profits. Either your accounts, it is in profit, it is negative or positive. So it's going to appear here. Either you are on profit or lose. It is going to appear under profit. So this swap is all about when your accounts, you have an open trade overnight. Let's assume I'm trading now. I have an open trade and I did not close it till the end of that particular day. And the trade is still open till another day. So the broker is going to charge me for swap, for me keeping a trade overnight till the next day. So you are going to be charged for swap. So this is what swap is all about. This is commission. Some broker, you can see, this particular broker is not charging okay, this is not charging for spread. When a broker is not charging for spread, you open a particular trade as well, so you not see any charges, any commission. So the broker will have removed his or their commission from the spread. When any commission is not removed from the spread, there is actually removed from, it will stated here. It will be stated here. So this particular broker is charging me minus $33 for this particular trade. So let me show you how spread works. This is how spread works. This is how spread works. So let's assume I want to open this current position. So I want to set a sell stop here. So I believe the market will come down and keep going down. So I set a sell stop here. Then I have my stop loss here at this point. I set my take profit at this point. So when the market reach here, my sell stop will trigger. So if a broker wants to charge for spread, so instead of my trade to start here at this point immediately, and my trade will trigger here, and I'll keep on making profit, but on my account, it will still showing me negative, minus. So from here now, from here to here, all the profits made here is going to be for the brokers. My trade is not going to start from here immediately. It's not going to start from here. Although I stated it that my trade should start from here. But if a broker is charging me for spread, so my trade will not start here. So the broker will calculate their spread, the amount they want to charge for spread, and place my trade below, based on their calculation, below maybe here. So all the profit made from here to here will be for the broker. Then my trade started reading from here now to any point I use as my take profits. So that is how spread works. So some broker will actually charge you for spread, and when a broker is not charging you for spread, they will charge you for commission, like something like this. They actually charge you for commission. So this is price, the current market, this is take profits, this is stop loss. So we all know how all this works. This is the currency we are trading on, this is the lot size, and this is the market execution I'm going for buy, and this is the time. So do we get this explanation?
Yes, sir.
So we can treat, if you have any question based on this, but it is 7 already. But we can still treat how much will you have to open a particular trade. You know, we are retail traders, and majority of people that trade forex markets, they are big banks. That is those people that have much money in forex markets. So our money is just a little change out of those big money in forex. So we are retail trader. So for us to have ability to control like 100,000 US dollar, so you just only need like small portion of the money, small amount out of the money to trade. The rest of the money, the broker is going to provide it to you. So that is what margin is all about. Your broker will provide you the rest of the money to trade. You just have to have a little. Some people can trade without using any leverage. So people trade with no leverage, but you don't have any means of trading without leverage, since a broker can provide you the rest of the money. So this gives us the ability to make profits with our little amount in the markets. So we can actually make a good profit from Forex. So with margin. So without margin, we'll be looking when they request for $1,000, 100,000 US dollar, we have to go and get this 100,000 US dollar for us to start trading on Forex. But with margin, we don't have to get all this amount of money before we'll be eligible to trade. So we calculate, next time we treat how much you have, the margin requirement, we call it margin requirement, how much you need to start trading. How much do you need to start controlling a particular amount of money? So I can even show you in Forex, but I'm still looking at the time. If you have not go against the time, because I don't want the training to be more than 1 hour. And this is 7 o'clock already. So let me share you my screen. Okay. So you can go to forex babypips.com to learn, to know more about margin, So we have what we know as margin requirements here. So this is what is margin. To read more about it, what is account balance, what is unrealized profit or loss, then what is margin. To have more idea on how it works. So call out level, trading scenario, margin call, and so on and so forth. Just quickly want to show us where you can get the margin requirements. This one is not taking me to where. No. So this is what we have been explaining so far. You only have to have a small money to trade a big position in the markets. So this is the use margin.
Baba, I really think, you know.
I'm sorry. Are we seeing it now?
Yes, sir.
Okay. Yes, sir.
So this is what I've been explaining so far. So what is used margin? So this is required margin, position size. You only have to have a little amount to trade a big position in Forex markets. So I will share you this. I will share you this in the group. So you can just go through the documents to understand more on the calculation and how margin works and how it works. So this is required margin. It's half calculation as well. So required margin is notional value multiplied by margin requirements. So it is based on these margin requirements. So if you want to trade Euro USD, You only have to have 2% of the requirement. If you are trading USD CHF, you have 3%. If you are trading USD JPY, you have 4%. So when you want to trade USD JPY and you only have 1,000 US dollar, so all what you need to trade 1,000 US dollar is what? It is just $400 to trade this amounts, which is 10,000. To train 10,000 accounts on USD JPY, you only need to have 400 USD. So, but we can explain this maybe so before we start. Next time when we want to start take another module of the training, so we can quickly explain what margin requirement is all about. So, but today, I understand what margin is all about, what free margin is all about, what equity is all about, and what margin level is all about, and balance. So that is the main topic for today, and that is what we want to look at. If you have any questions based on this so far, based on balance, equity, free margin, margin level, used margin, so you can just let me know. So I will show you the file on the group, so you can go through it to know more and understand more about margin. So if you have any question, you can just let me know. So if you don't have any question, I think we are through for today's training. So I will share the recording in the group and also share you the baby pips link in the group. So if you want to read more about margin, so you can quickly go there and read through it. So let me stop sharing.